Today was a very telling day for my strategy and the wave indicator over here on the right side. And I just want to make this video to show you guys exactly how it worked and how you can use this data and align it with your strategy and be able to tell where the market's going in the future. So far for the month of May, this strategy has had us 11 winning days and 2 red days. And then 2 of those days out of the month, we've had no setup. So if we don't get the setup, we don't take a trade. And right now on each account, we're up $6,187. Multiply that by 3. You can do the math, over $18,000 on the month. All right, enough yapping. Let's get into yesterday's price action. See exactly what I'm talking about when I say our strategy aligned perfectly. So if you have not watched my other videos, I trade the same strategy every single day. We mark our first 15-minute candle high, like we do here, of New York session. We mark our first 15-minute candle low. Most people say that the opening range is only traded one way, but the way that I trade the opening range breakout, the 15-minute orb that you're seeing here, it has to align with the data on the right-hand side. And all this data that I'm showing you is going to be on my Twitter account, because if I go to the Real Flowtopia, it's showing today's data, and I have other examples for that I'll be posting in the future. But for today, I want to focus on yesterday's data because this was a really good example on how you could have taken advantage of the wave. So we have our 15-minute high marked out, our 15-minute low. Now it's time to check out price action. Let's go ahead and press play, and let's see what happens next. All right, we have 2 15-minute candles. Now, how my strategy works is I don't take a trade unless we break out of one of these directions. So I'm either looking for longs. If we get above our 15-minute opening range, I will not take shorts. And if we break below our 15-minute opening range, I will take shorts, and I will not be looking to take any type of long positions. But one thing that you're forgetting is the only way that I take the trade is if the direction of the breakout aligns with the wave indicator here on the right-hand side. If you take a look at the right-hand side here and look at the wave indicator, how it works is there's 3 lines. You have your SPY price, your call line, and your put line. You can actually turn your SPY price off if you go here and press the SPY price. It's pretty easy. It just takes out a lot of noise. But overall, what this is showing you is what's winning in the market. Is smart money buying or selling calls, or is smart money buying or selling puts? And in this instance, smart money was buying calls and not really messing with puts. They were staying pretty stagnant. And so as long as I see call volume rising, I am looking for an upside position if we can break above our 15-minute opening range. And if we zoom in very, very close, we can see that we did indeed get a 15-minute opening range breakout with a 15-minute candle close above the range. So now that we have a 15-minute close above our range and calls are on the winning side, calls are beating puts in the market, I'm going to go to a lower time frame and look for a retest. If we can get a retest of this zone, of this range here, I will look to take a long entry as long as we can reclaim and look for more upside levels. In this instance here, we can see a couple candles go down into the range. I've already seen this happen. We get down here. We see confirmation, 15-minute opening range breakout. We retest this zone. Calls are beating puts. You can actually see that calls were ripping. I told my Twitter followers because, I'd like to do that on Twitter. I like to post, the wave, the flow, and all that stuff. And I said that if we have a key level and we hold that key level, I would look for upside, which was 590, which is basically this yellow line. So we have a 15-minute close above the opening range. We now have a retest into this zone, and calls are beating puts. You can actually see that calls are ramping at the time I posted it on Twitter. Calls were rising up over $8 million at the time as we were retesting this zone. You'd set a long entry here, stop loss below the orb, take profit at the high of day. Once we hit high of day, you could take your next profit level at the next high. It really all is situational and depends on what you would like to do. If we press play, we can see that we hit our price target, perfect trade, barely saw any drawdown, and hit for a perfect TP. We're not done though. Even though we did catch a nice trade, we did play calls here on SPY. Alerted it to my Discord, link in the description by the way. Posted it here, 40% on these calls. You can see no longer holding calls, $1,200 a day on futures, 40% on SPY calls, all of that good stuff. But there's one thing that you are forgetting. Not only did I take profits here, but I also realized that we were flipping on the wave. We were flipping calls to puts. You can see calls fell off here. So you can see the big dump in calls, and puts actually stayed pretty stagnant, but a huge sell-off in calls. So that indicated to me, yeah, I'm not going to take shorts, even though I could, but I'm going to get out of my calls because if calls are falling, I want to have the best risk-reward ratio and maximize my gains. So I'm going to go ahead and take profits there in case it's the top. So if we go on my Twitter feed, we can see I actually alerted the trade on Twitter, which is pretty nice of me. I usually only post my trades in the VIP premium Discord. Again, link in the description. So if you took that trade with me, you were green, but we ended up getting all out as soon as puts flipped calls. When we saw call flow absolutely die off the map, we decided to take profits. This was the exact area on the chart that call flow died off and put flow started rising, kind of staying stagnant, but calls were dying off in the market. If we press play, let's just take a look at what happened. See consolidation here, right? A lot of consolidation. Most people are going to see this and say, hey, if we break this high, we're going to go long, right? Most people are going to see that. Next candle breaks that high. When that high breaks, everybody and their mother is long. Everybody's long except me. You know why I'm not long? Because if we take a look at the wave, what do we see? We see that puts are outweighing calls and calls are dying off. So I said, I'm going to stay away. And you can see on Twitter, I kept posting that, hey guys, like puts are beating calls. So y'all better be careful. And let's go ahead and take a look at what happens next. If we press play, absolute dump to the downside. I mean, that's like unbearable to even think of. Fake out to the upside, fake breakout to the upside. How did we know it was a fake breakout? Because the market showed that puts were beating calls, so we would not be taking any type of long positions. Now, there are many, many days where the wave might say the opposite. The wave might say that puts were winning all day and all we did was go up and then we dropped into the day. That's okay. My strategy tells me that the only time I take a position is relative to the 15-minute opening range. There are going to be days that wave is not aligning with the market. Their wave is completely off of the market. Heck, I've seen days where the wave is showing that we're going up in calls all day, but the market's just dumping. But if we're not above this 15-minute opening range, which is this yellow line, then I'm never going to take a long entry. So as long as we're dumping below, even though, yes, we're missing the whole move, if wave's not telling me we're bearish, I'm not taking the trade. So let's go ahead and summarize. We saw a 15-minute opening range breakout to the upside here. As soon as we closed a candle there, I looked at the wave, saw that we were bullish, and played the retest of the opening range. Beautiful play, beautiful call out. Everything was perfect. As soon as I saw on this yellow line here, this yellow arrow, as soon as I saw calls cross puts to the downside and saw that they were selling calls, I got out for my 40 to 50%. My $1,200 per account or $1,500 per account. And then you can see what happened next. Absolute fake out to the upside, and we dumped lower and lower to new low of day. If you enjoyed this video and you want to learn more about the wave and more about my strategy, make sure you guys leave a like and comment some feedback below. And if you want access to this beautiful platform called Flowtopia, where you can see the wave and you can see all of the options trading data, head on over to flowtopia.co. I created this for retail traders so we could have an edge over the market makers. And again, if you want to see all of my VIP and premium signals, make sure you click the link in the description to join the Discord. I'd love to see you there. I also host a free morning call every single morning, Monday through Friday at 9 a.m. Eastern, 30 minutes before New York Open. I go over my top watches, my SPY and QQQ levels, and my overall game plan for the week for completely free at 9 a.m. Eastern. Just join the free Discord link in the description. And last but not least, if you want a funded account, instant funded account, or a combine, either one, go over to top1futures.com and use code CHAMP in all caps for 40% off. Yes, you don't have to get a combine. You can get an instant funded account. Don't have to worry about a challenge, and you can get it instantly and use code CHAMP in all caps, CHAMP, CHAMP, for 40% off. Love you guys. Hope you have a good day, and I'll see you guys all in the next video. See you later.